What is happening in the markets right now? The pace of change is absolutely insane, and if you're not plugged into the latest, you're missing out on the biggest moves of the year. Get ready, because Bitcoin Bulletin is live and we're dropping the kind of intel that could redefine your strategy. We've got massive financial plays unfolding, critical market signals flashing red and green, and strategic moves from major players that have everyone talking. This isn't just another update. This is your all-access pass to the pulse of the market. You do not want to miss what's coming. Stick around, because we're diving deep into the stories that matter right now. First up, we're breaking down a monumental financial maneuver that's shaking up the entire sector. One of the biggest names out there has just secured a colossal sum of funding, a staggering $884 million. But it's not just about the cash, it's what they plan to do with it. We're talking about a strategic expansion of their already significant holdings, signaling a massive vote of confidence even as their accumulation strategy faces its own set of challenges. This is a story packed with high-stakes decisions and market-moving implications. Then, we're shifting gears to analyze the complex dance between market seasonality and investor sentiment, all while Bitcoin eyes an astonishing price target. Analysts are projecting a surge that could push Bitcoin to $150,000, but there are critical support levels that need to hold. We'll explore the key indicators, the potential pitfalls, and what this means for the broader crypto landscape, including major movements in Ethereum and Solana. Get ready for a deep dive into the data that could predict the next big wave. And finally, we're dissecting a masterclass in strategic asset accumulation. We're looking at how one company is not only building a formidable Bitcoin treasury, but also setting a precedent for how other institutions can enter and thrive in this space. This isn't just about buying and holding, it's about a calculated, long-term vision that could unlock the next phase of mainstream adoption. You've got all this and more coming up. Don't go anywhere. Hit that like button, subscribe, and ring that notification bell so you never miss an update. A funding colossus unveiled. Metaplanet has just executed a massive financial maneuver, securing an astounding $884 million in a recent funding round. This colossal injection of capital positions the company for significant strategic expansion, with a clear intention to bolster its already substantial Bitcoin holdings. The sheer scale of this raise underscores a powerful bullish conviction in the long-term value of Bitcoin, even as the company navigates the inherent complexities and challenges associated with its current accumulation strategy. This move is more than just a financial transaction. It's a bold statement about Metaplanet's commitment to Bitcoin as a core asset in its portfolio and a potential bellwether for broader institutional sentiment. The company's strategy involves not only acquiring more Bitcoin, but also potentially leveraging this capital to fortify its position in an increasingly dynamic market. While the exact mechanisms of how this capital will be deployed remain closely watched, the announcement has sent ripples through the investment community. Analysts are scrutinizing Metaplanet's approach, particularly how it balances aggressive acquisition with the broader market's volatility and its own internal accumulation targets. The success of this strategy could serve as a case study for other entities looking to enter or expand their Bitcoin exposure, especially in a climate where regulatory clarity and market stability are paramount. This significant funding round comes at a pivotal moment for Bitcoin. The cryptocurrency has seen considerable price action, with institutional interest waxing and waning alongside macroeconomic factors and technological developments within the crypto space. Metaplanet's substantial capital raise signals a belief that the current market conditions, despite potential headwinds, are ripe for strategic accumulation. It suggests a long-term perspective that views short-term volatility as opportunities rather than deterrents. The company's ability to attract such a large amount of capital in the current environment is a testament to its strategic vision and the growing institutional appetite for digital assets. Furthermore, the implications of Metaplanet's expanded Bitcoin holdings could extend beyond its own balance sheet. A significant increase in holdings by a major player like Metaplanet can influence market dynamics, potentially impacting price discovery and liquidity. Investors and observers will be keen to monitor how this capital is deployed and what impact it has on Metaplanet's overall financial health and market position. The narrative around Bitcoin adoption often hinges on the actions of significant corporate entities, and Metaplanet's latest move places it firmly at the center of that ongoing discussion. But what does this massive capital infusion mean for the company's ongoing Bitcoin accumulation goals? We'll explore the intricate balance of market sentiment and seasonal trends that are currently shaping Bitcoin's trajectory. Bitcoin's $150K horizon, sentiment vs. seasonality. The cryptocurrency market is currently a fascinating battleground where investor sentiment and historical seasonality are clashing, all while Bitcoin eyes an ambitious price target of $150,000 by year-end. This dual narrative is creating a complex environment for traders and investors alike, with a wide spectrum of predictions emerging from market analysts. Some veteran traders, like Peter Brandt, foresee a final, significant surge for Bitcoin, potentially pushing it into the $125,000 to $150,000 range. However, Brandt also emphasizes that the window for such a move is narrowing, adding a layer of urgency to the current market dynamics. A critical factor supporting this bullish outlook is Bitcoin's ability to maintain its position above the $107,000 mark. This level is viewed as a crucial psychological and technical support. A sustained breach below it could trigger a sharp 50% correction, potentially sending the price back down to around $60,000. This highlights the delicate balance the market is currently maintaining. Adding to the bullish forecasts, prominent figures like Galaxy Digital's Alex Thorne and BitMEX co-founder Arthur Hayes are projecting even more aggressive targets, with some estimates reaching as high as $150,000 to $250,000 by the close of the year. These predictions are fueled by a confluence of factors, including increasing institutional adoption and the anticipation of favorable macroeconomic policies. The potential for a Federal Reserve rate cut, which the market is pricing in with an 86.4% probability for September, is seen as a significant catalyst that could further boost Bitcoin's momentum. This expectation of looser monetary policy typically makes risk assets like Bitcoin more attractive to investors. In parallel, Ethereum is also showing signs of strength, having reclaimed its 2021 high of $4,870. This resurgence is partly attributed to substantial inflows into spot Ether ETFs, which have seen billions in net inflows since their launch. The growing institutional embrace of Ethereum, coupled with the expected rate cuts, positions it for potential further gains. Meanwhile, Solana, despite facing ongoing discussions about token inflation, is gaining traction with 8 pending US-based ETFs. While its current price of $197 represents a monthly gain, it still lags behind its all-time high, indicating a potential for recovery and growth. However, the market is not without its cautionary notes. Prediction markets indicate a significant chance, around 68%, that Bitcoin could fall below $100,000 before 2026, a sentiment that has grown stronger recently. Furthermore, the historical data for September presents a challenging seasonality pattern. Analysis shows that Bitcoin has historically experienced declines during the third week of September, with an average drop of 3.5% since 2013. Some analysts point out that Bitcoin has fallen 100% of the time between September 16 and 23, with an average decrease of 5%. This historical trend could act as a headwind for bullish sentiment and price appreciation during this specific period. Can Bitcoin overcome this historical September slump and reach those lofty $150K targets? Now, let's pivot to a company that's making strategic moves to build its Bitcoin reserves and influence institutional adoption. MicroStrategy's Bitcoin Blueprint, Accumulation and Institutional Influence. MicroStrategy continues to solidify its position as a bellwether for corporate Bitcoin adoption, employing a strategic accumulation approach that serves as a potential blueprint for other institutions. The company's ongoing commitment to acquiring Bitcoin, even amidst market fluctuations, highlights a disciplined and long-term investment philosophy. This strategy is not merely about holding a volatile asset. It's about integrating Bitcoin into the core of its treasury operations and signaling to the broader market that digital assets can be a significant component of a modern corporate finance strategy. By consistently adding to its holdings, MicroStrategy aims to build a substantial Bitcoin treasury, which in turn enhances its resilience and potentially its valuation. The company's CEO, Michael Saylor, has been a vocal advocate for Bitcoin, often emphasizing its properties as a store of value and a hedge against inflation. MicroStrategy's acquisition strategy is characterized by opportunistic buying, often capitalizing on market dips to acquire more Bitcoin at lower prices. This approach requires a deep understanding of market cycles and a strong conviction in Bitcoin's long-term appreciation. The sheer scale of their holdings, which now numbers in the hundreds of thousands of Bitcoins, makes them one of the largest corporate holders of the cryptocurrency. This significant presence positions MicroStrategy as a key player, whose actions and statements carry considerable weight in the institutional adoption narrative. Beyond its own balance sheet, MicroStrategy's actions have significant implications for the broader ecosystem. Its persistent accumulation efforts are helping to normalize Bitcoin as a legitimate corporate asset. This normalization is crucial for attracting more institutional capital, as it demonstrates that large, publicly traded companies can successfully integrate Bitcoin into their financial strategies without jeopardizing their operations or shareholder value. The company's transparency in reporting its Bitcoin holdings and the rationale behind its strategy provides valuable insights for other corporations considering similar moves. It effectively acts as a real-world case study, showcasing the potential benefits and challenges of corporate Bitcoin treasury management. Furthermore, MicroStrategy's approach to Bitcoin accumulation is often intertwined with its business operations, creating a synergistic relationship. While the specifics of how they leverage their Bitcoin holdings beyond simple accumulation are not always public, the underlying principle is to create value through strategic asset management. This could involve various financial strategies or simply benefiting from Bitcoin's potential long-term appreciation. The company's consistent messaging and actions have undoubtedly influenced the conversation around Bitcoin, making it a more familiar and acceptable asset class for traditional finance professionals. But is MicroStrategy's bold Bitcoin strategy a sustainable model for long-term institutional growth? Let's dive into another company that's making waves with its own massive capital raise and expansion plans. Metaplanet's $884 M-raise, expanding Bitcoin amidst accumulation hurdles. Metaplanet has recently made a significant splash in the financial markets by securing an impressive $884 million in a new funding round. This substantial capital infusion is earmarked for strategic expansion, with a clear focus on increasing the company's Bitcoin holdings. The move signals a robust confidence in Bitcoin's long-term prospects, even as Metaplanet navigates challenges within its current Bitcoin accumulation strategy. This substantial raise positions the company to potentially deepen its involvement in the digital asset space and influence market dynamics through its expanded holdings. The company's strategy involves a dual approach, not only acquiring more Bitcoin, but also potentially utilizing this capital to strengthen its market position amidst evolving economic conditions. The precise deployment of these funds is a subject of keen interest, with analysts closely observing how Metaplanet will balance aggressive acquisition with the inherent volatility of the cryptocurrency market and its internal accumulation objectives. The success of this strategy could provide valuable lessons for other entities considering similar investments in digital assets, particularly in an environment where regulatory clarity and market stability are critical considerations. This significant funding round arrives at a crucial juncture for Bitcoin. The cryptocurrency has experienced considerable price fluctuations, influenced by a mix of macroeconomic factors, technological advancements in the crypto sector, and shifting institutional interest. Metaplanet's substantial capital injection suggests a belief that the current market climate, despite potential obstacles, presents opportune moments for strategic accumulation. It reflects a long-term perspective that views short-term market volatility as potential entry points rather than reasons for divestment. The ability to attract such a large sum of capital in the prevailing market conditions is a strong indicator of Metaplanet's strategic foresight and the growing institutional appetite for digital assets. Moreover, the implications of Metaplanet's augmented Bitcoin holdings could resonate beyond its own financial statements. An increase in holdings by a prominent entity like Metaplanet can influence market dynamics, potentially affecting price discovery and overall liquidity. Stakeholders and industry observers will be closely monitoring the deployment of this capital and its impact on Metaplanet's financial standing and market influence. The narrative surrounding Bitcoin adoption is often shaped by the actions of significant corporate players, and Metaplanet's latest move places it at the forefront of this ongoing discussion. The company's approach to accumulating Bitcoin is often driven by a conviction in its potential as a store of value and a hedge against traditional financial system risks. While the specifics of their accumulation strategy might involve sophisticated market timing or leveraging specific financial instruments, the core objective remains to build a significant and resilient Bitcoin position. The success of such a strategy is often judged not just by the quantity of Bitcoin held, but also by the efficiency and effectiveness with which it is acquired and managed, especially in the face of fluctuating market prices and the inherent complexities of digital asset custody. How will Metaplanet's massive capital infusion impact its ongoing Bitcoin accumulation goals? We're about to dive into the critical interplay of market sentiment and seasonal trends that are currently shaping Bitcoin's price trajectory. All right, let's do a lightning recap. Metaplanet just landed a massive $884 million to boost its Bitcoin holdings. Bitcoin is eyeing $150K, but watch out for September seasonality and key support levels. MicroStrategy is proving its Bitcoin accumulation strategy is a viable model for institutional adoption. And we're seeing how these big players are shaping the future of finance. That's all the critical intel for today. If you found this valuable, smash that like button, subscribe to Bitcoin Bulletin for all your essential market updates, ring that notification bell so you never miss a beat, and hit us up in the comments with your thoughts. Don't forget to follow us on all social platforms to stay connected.